Hello there, Maverick currency traders. This is Rob Reinhold, and this is April 17th. Let's check in on what happened today. In this session, we're going to be going over the news. We're going to take a look at the broad markets and the commodity markets. As always, we're going to throw all of our biases out the door and look at just the charts and what are they telling us. We're going to score everything from +3 to -3, and then we pit the strongest against the weakest in our Forex trades, and we take a look at the relative strength in cryptos.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so we had another down day in the market. The market continues to sell off. This one wasn't as brutal. It wasn't as intense as some of the other days, but look, it was still down. And one of the things we saw was that it fell down and it stayed down. There was a couple tiny little rallies, but it's very clear buying the dips is no longer a winning strategy. It's been like that for 4 or 5 months. The sentiment has absolutely changed. Today, we did see a little bit of relief on the dollar. The dollar went down, but we have liked dollar long, and any sort of pullbacks in dollars we think are good buying opportunities. Nothing has changed as far as that goes. And we did get the UK CPI came in a little hot. The expectations were for 3.1%. It came in at 3.2%. You would think that the pound would go up on that news, but it didn't. The pound did not go up on that news. It went down 0.14%. As you can see here, this is a really muted day. The dollar was the largest mover, down 0.4%. As I said earlier, we see any pauses in the dollar, any pullbacks in the dollar as buying opportunities more than times to get short. We did see the Aussie and Kiwi have up days. We typically don't see this on risk-off days in the market. So when we take a look at what usually happens when the stock market goes down, you usually see Aussie Kiwi go down. You usually see yen and dollar and Swiss franc go up. It didn't really happen. What that tells us is the correlations are broken. We talk a lot about correlations, and we use that a lot in our trading, but we have to be honest when they're not working. This is one of those times where it's just not working, which means you can't count on that in the future until it starts working again. This is showing a very mixed picture, and this is showing this is not a great time to trade in the Forex market. And if we go over to other markets, you can see that they're all on their heels. S&P went down, crypto down, gold down. Gold's been a standout, but it's had such a big run. I think gold's probably got more of a pullback coming for it. Oil down. Everything was just down. Bitcoin down, Bitcoin Cash down. As you can see, Litecoin decided to not go down today, but that doesn't mean it's a buy. Everything is basically pointing to lower prices. And when we take a look at where the market is, you can see that we have clearly broken down. And it's not looking good on a technical basis. So we broke through our 50-day moving average here. And a lot of times you get what's called a pierce, and then it recovers very quickly. And we were watching for that. We talked about this. Don't be surprised if it pierces the 50-day moving average and then recovers. This is not what we're talking about. This is piercing the 50-day moving average and continuing lower. The next test to see if this is truly a trend change, we're already below the 20, we're below the 50. We want to see a bounce up that fails. At that point, we can now say that this market is in a downtrend. We can't say it quite yet because, again, remember, we need to see lower highs. This really hasn't done it much. This has been one big pullback from the high that got a little nasty at the end. We need to see a rally that fails. At that point, that will clearly be a risk-off market. As you can see, we're close. We're just not getting that confirmation yet. But everything is telling us that the move is likely to get worse, not better. We could have a bounce. If that bounce fails, then this is turning into a bearish market. Not a bear market, because that has its own certain meaning to it, but a downtrending market for sure. Let's take a look at the calendar, what's on schedule for the next 24 hours. And we've got Aussie employment report. So we got the Aussie employment report tonight. If you are playing the Aussie, you need to be watching this. Last report was a stellar report. Fantastic. 116,000 jobs. It was a blowout. As you can see here, they're looking for a lot less. And I feel like the number last month was such a big number, such an aberration. This one probably comes in maybe as expected. So they're going to take a look at the average. If this comes out negative, I think people are going to say, hey, all of that strength that we bought into the Aussie over the last 2 months because of these strong numbers, it was an aberration. And I think the Aussie could take a hit. So I would much rather be short Aussie than long going into this report. But guess what? I'm not going to do either of those because I don't love Forex right now. I hate to say that. We have a saying at Maverick, trade the market in front of you. Not the market you want it to be, not the market you think it should be. We must be honest as traders. Sometimes there's good times to trade. And sometimes there's bad times to trade. If you constantly click the button to try to enter trades in the bad times to trade, you're going to use up all your trading capital. You're going to take little losses. It's going to be death by 1,000 cuts. If you learn how to sit out of these markets, or if you can't sit out, then drastically cut position sizes to where if you literally can't control clicking the button, just trade very, very, very small trades just to get your itch. At some point, the market will get volatile again and there will be better trading. But until that market comes, again, you're just going to chop up your trading capital, and you need that trading capital for when the times are good. Let's go through the currencies that moved, and let's see if we can see any opportunity for the next 24 hours. I'm going to start first on Litecoin here, and taking a look at the daily chart. The daily chart doesn't look great. So here's the daily chart. You can see we've come down. We are finding some support. Remember, when support is met, there should be a rush of buyers in there. A rush of buyers that say, hey, you know what? We think the price is good now. We want to buy in. We are not seeing a rush of buyers here. That is not a rush of buyers here. That is basically, we had a big fall, it ran out of gas, and now it's setting up for likely another big fall. When I take a look at a 4-hour chart, I can say, hey, you know what? Well, maybe this thing, if it can break above certain levels I might be interested in. This is where we really like to look at the daily chart, because the daily chart is telling us, don't get fooled. Don't get fooled by a shorter term chart that there is upside. There is no upside here on a daily chart. This is saying do not touch. So I don't want anyone to go into smaller time frames and start to make up a reason of, hey, this thing looks like it could be getting some momentum. The daily chart tells you don't get sucked into this. Let's take a look at some currency crosses. So again, the dollar has been strong. Here's the daily chart, and you can see big move up. We're just getting these pullbacks. These are very natural, normal pullbacks. The question you should be asking yourself is, when is this pullback over? And at this point, we don't know. We have no idea. If we take a look at some levels here, a pullback to this level again, we're looking at the dollar basket. So these dollar amounts really don't matter since they are a combination of many currency crosses. We'll take a look at some dollar crosses, talk specific numbers. There could be some support in this area. There could be some support down here. At this point, the dollar is still moving down. There is no reason at all to be looking to buy dollar here over the next 3, 4, 6, 10 hours, whatever it is, until it turns and makes a move higher. Dollar has been really the only standout to look to buy. So there's really not anything left. When we go through the list, again, I'm just going to click through this very quickly. Yen is telling us there's no momentum. Swiss franc is doing the same thing. It's had a run. It's likely having a pullback. But when we look at the daily chart, this looks more like a bear rally than anything. This looks like a better shorting opportunity than a long opportunity. But I'm not going to look at it short because remember, I think this market is going to be a risk-off market. That likely helps the Swiss franc. And I think this rally here over the last couple of days has been solely because the market's going down. People are rushing into currencies of safety, not because the Swiss franc is any good whatsoever. Coming over here to the euro, look at this. It's just stuck in this range. I have no desire to play around in this currency. I have less desire. Look at this pound. I mean, anyone who's tried to trade the pound lately, it's been very, very frustrating. Big wicks up and down. Every time anyone thinks it's breaking out, it fails. Every time they think it's breaking down, it rallies. Don't get sucked into these. It's literally telling you, do not touch. Just think of a porcupine. Like, don't touch it. It's telling you, don't touch it. It's a terrible trade. CAD, okay, you could make a case that we might get another little run up, but there's not enough gas in any of these things. Aussie had been the standout, but now it's getting hit. And frankly, to me, this looks like a better short than a better long. And I come in here to a short-term 4-hour chart, and I can see, okay, we've got this stair-step pattern moving down, down, up, down, up, down, up. This is, again, more of a base than a rally, but this looks beautiful for a shorting opportunity. So, again, this is Aussie against dollar. Aussie against dollar, I think, is a decent pair. The problem is, again, I don't love the dollar. The question is, what is the best looking currency out there to go long against? And it's crazy to say it, but I think it is the Kiwi. I think it's the Kiwi. So this is the velocity scoreboard. And again, most everything is in the middle. We don't like to trade when things are in the middle. We like to trade things that are +2, +3, and -2, -3. And you can see there's no trade whatsoever. If I had to make a trade, and someone was like, you have to make a trade, here's a gun to your head, I would have to make a trade something like Kiwi Aussie. Aussie has the most downside momentum from where it was. Kiwi is decent. So that's really the only trade I'm going to look at is an Aussie Kiwi short. So let's go take a look at that on the chart. Let's start off with the daily chart. Big rally here, big rally. And I always like to go back and just see the big context of this. This is the Aussie Kiwi. They are highly correlated together. And you can see they've been in this range of all the way up to 110. A couple times it's poked its head above 110. And then the bottom of the range is down here at 106. If you really take a look at, okay, this is what it does. It runs from one point to the other point. Now we've got, again, this run up, this pull back. We've got 4 or 5 days of consolidation, and now it's breaking down. This is a decent trade. It's not a great trade. There's no great trades out there right now. But when we take a look at like a 4-hour chart, hey, this is a decent looking trade. It's a decent looking trade. We've got a bear rally on our hands. And if we take a look at some levels here, likely this thing makes another move down. So we go from 108.74 down to 108.57. So again, I'm just going to estimate it takes, 3, 4, 5 candles to get down to that point. I'm not chasing this for 20 pips. It's not worth it. It's literally not worth the risk to chase a trade for 20 pips when it's at $1. Now look, if you're looking like Kiwi dollar, 20 pips, okay, that's fairly substantial. It's like 0.4%. This is 0.2% or less. It's just not worth it. It's not worth it. Sadly, sometimes when we do these videos, it's very exciting. I've got lots of stuff to point out. And sometimes the best thing I can do is tell you, trade the market in front of you. The market in front of us right now is not great. Don't click buttons. Don't churn up your trading capital. Keep your capital in cash. The market will turn at some point, and we'll have a much better viewpoint from there. Sorry I couldn't be more rah-rah, but look, that doesn't make any money. We want to make money. And so at this point, it's more about keeping your money, keeping it safe. Don't churn your trading capital. Wait for a better opportunity. Goodbye, everybody.